So 4.3%, it is a surprise to market consensus, but still a very low number by historical standards. What does it say about the strength of the labour market right now and the broader economy?
So I think the labour market's been looking pretty robust, a little bit more robust than most people had expected. But I think at this time of year, we've always got to be careful. You've already mentioned it, that seasonality, January, February, it's people taking time off in January, beginning their search for work. At the end of the month, we know hirers really don't put ads out there until the end of January. So it can take some time to flow through. And then we've had participation rate increase this month. So I think we've got to take a step back and look at movements over a couple of months, not just one single month.
Let's talk about jobs growth. Around 50,000 jobs. So that's a very strong number. Certainly has beaten the consensus of 20,000 jobs growth. We don't have much granular details from today's ABS data set. From what you are seeing on your platform, where is the hiring actually coming from?
So we've seen a lot of hiring in the more manual roles in construction and healthcare. So we know that nurses, they're always in demand. We've seen demand there, but more recently it's been in those construction and more manual roles. And we have seen a little bit of a pullback in those more white collar roles.
Well, as mentioned earlier this week, RBA Governor Michelle Bullock mentioned the R word, recession, if inflation doesn't come down. If that does eventuate, what does it mean for unemployment and hiring?
I think hopefully the RBA don't have to raise rates so much that they induce a recession. I think the concern is that the labour market, from their point of view, is too tight, although today's number suggesting unemployment is a bit higher than they thought already. I think the fact that they weren't necessarily thinking about the participation rate, which had come down over the last year and has bounced back, means there's a bit more labour supply out there than maybe the RBA are thinking. And hopefully for everyone, they don't have to induce a recession to get inflation back, because that would mean less employment growth and likely a much higher unemployment rate.
Well, so far this year, we've been hearing announcements from big corporations about massive job cuts. What's your outlook for jobless rate over the rest of the year? And given today's surprise rise, could it deteriorate even more rapidly at some point?
I don't think we're going to see a rapid rise in the unemployment rate, purely because today's increase was partly driven by that increase in participation. So part of the reason we haven't seen the unemployment rate increasing so much so far is because people have sort of left the labour market. We had real big cost of living pressures over the last sort of 2 years. They've eased a little. They're coming back. So maybe that is inducing people to participate in the labour market a bit more and pushing up that unemployment rate a little as people search for work. So I think, we should expect the unemployment rate to continue to drift up, but the fact that it's already taken that leg up now maybe means it's a bit more muted in its increase for the rest of the year.
Well, the RBA is certainly concerned about the spare capacity in the economy and the tightness of the labour market. Given today's numbers, how do you think the RBA will make a judge of that?
Well, obviously the unemployment rate going up suggests there's a bit more spare capacity around than they were thinking. So that does give them a little bit of room. But I think they're mainly looking at inflation at the moment. Obviously, they got the surprise at the end of last year. They weren't expecting inflation to be as high. They're a bit concerned that, we're above the potential of the Australian economy to actually produce stuff. There's too much demand about. So they're sort of looking backwards, trying to control that, making sure people understand that they're serious about getting inflation back to the middle of the band. So they do not want people expecting more inflation going forward. But that's really hard to do when you've got an oil shock pushing up prices that people see every day when they go past the petrol station. So really tough spot for the RBA at the moment. They've got domestically, it looks like the labour market's a bit too tight for them. And globally, we've got prices going up. So very tough position for the RBA at the moment.
Yeah, as you mentioned, today's numbers suggest that we have a bit more spare capacity. And I'm just looking at the probability of the next interest rate hike in May, and that remains around 53% chance. So what do you think that the trajectory of the interest rates given today's numbers?
Yeah, it's a tough one because we've got a fair break between this week's hike and the next meeting, and there's so much could happen. So, if the Middle East conflict drags out, then really that's going to start to put demand pressures on the economy to sort of ease. We're going to see GDP coming down a bit faster or not growing as quickly. And so maybe that's going to be in place of a interest rate hike. So I do think, the 50-50 basically call on interest rates at the moment going up was holding sort of reflects how much uncertainty there is in the global economy at the moment.
And as you mentioned, yes, some economists are tipping 1 or 2 more interest rate hikes this year. Where do you land on that?
Well, it really does depend on how the Middle East plays out. But I do expect, right now, the RBA is trying to get those inflation expectations out there. They're trying to make sure they're anchored so people aren't asking for bigger wage increases and putting pressure on wages and prices to go up. So I would expect at this stage, the RBA to probably put another hike in this year.
Well, a lot of factors at play at this stage in this space for sure. Blair Chapman, thanks so much for your time and always great to have your insights.
No worries. Thanks.